Every weekend we try to do a show preview for the coming week. So this is a preview for the week of August the 13th, and we're looking forward to sort of introducing ideas regarding options and investing over this coming week. So the first time item that we're looking at is, man, what a crazy week this past week. Clearly the stock price bounced up, got to 729 and then pulled back from there. And prior to getting deep into this, I want to just remind you that this is a copyrighted show. Anything said in this show, we'd appreciate you noting that it is copyrighted. Anything said in this show is not authorized to be rebroadcast without permission. So I was sort of eager to dive into the week's trading activities. Wow. This past week, I have to say, was quite amazing, and Tesla remains quite amazing in terms of what's been happening over the last several weeks, i.e., we've been sort of tracking the pin process. As you know, the pin is when market makers sort of reduce the stock price in order to make money off of folks who are actually out there, usually with a lot of calls. And as the week winds out, the stock price will be tanked as a way to make those calls worthless and cause the market makers to make money. This week in particular was quite amazing for us because at the end of the week for Friday with our Patreon supporters, we did put out a note that the stock price would end at or below 705 for the week. It finished up 699 3/4, sort of wiping out the calls, making some of the puts a little bit profitable on the bottom end there. But there's a lot of value that was wiped out on puts and calls because the number was almost right on 700, which sort of destroyed 20,000 puts and calls at the same time, which was pretty amazing to watch how this is done. So we actually, as usual, just wanted to post a chart of the most interesting numbers that are out there that you'll see now. Usually what I focus on to start is where the largest numbers of puts and calls. They're usually right at the 700, the 650, the 600, the 750s, and in this case 800. What's strange, and we may have to update this show on Monday or Tuesday, is that we were looking at the total number of puts and calls that are sitting out there, and it turns out that there are actually more puts this week, which is greater than which is sort of never the case. We usually have huge numbers of calls, but the problem with this can change rather quickly. So I believe the bias for Tesla is going to still stay positive, even though we have a negative call setup going into the weekend. But like I said, this change can occur very quickly and instantly in the other direction. I am having a debate, and it'd be fun to get feedback on this. I'm actually considering creating a Facebook page where invited guests will be able to exchange ideas with other sort of guest hosts that we have that have been doing a lot of different types of trading and doing so very successfully. One person in particular that comes to mind is a gentleman named Tom out in Arizona. He actually has been doing a lot of selling of puts and calls profitably over time. And I understand that the general concept, I've done a little bit of it, but it's fun to have people that have been doing it over and over again to describe the logic of, what they're doing, why, what positions they're holding, and what their expectations are relative to those positions for the movement of the stock and what kind of cash they're making in the process. So let us know if this is something that you have an interest in. We do a little bit of this in the Patreon area. We tend to cover a broader range of issues than just what's going to happen with the stock price and where we see things are going. It is part of that, but I also wanted to expand the number of contributors so we could focus on different strategies that one might want to consider if you wanted to use it as a hedging tool or a way to make sort of consistent money with low risk if you're selling For example, calls that are covered. You know, one of the things there was 3% a month is what one of our viewers told us they were getting, guaranteed, no headaches from Tesla, because you do get paid the premium when you sell that covered call. And if it does not, if the stock doesn't cross your covered call price point, you get to keep the premium and you get to keep the stock. So there's a lot of different ways to play things, and options give you an unlimited number of ways to sort of be active in the market. I'm knowledgeable of it, how it works. It can be very lucrative, but I've been reluctant to get into it because there's a whole bunch of people that like to fire questions or comments across the YouTube page, and it's against the SEC rules to not have private conversations, have public conversations about the trade you should make. So I've ducked answering that stuff because a private forum, there's conversations you can have, but you can't do public ones if you don't want big problems with the SEC. So in general, what our forecast for this coming week is, yes, there's a possibility of the 3-day rule hitting relative to news in Austin. I kind of feel like that possibility is out there, but I think that until we have the major news outlets willing to pick up Austin's start of production and then analysts to support that, I think we're kind of in this limbo zone of, yes, this is happening in Austin, but we can't get the buy-in necessary to push the stock price yet. And when that happens, I think the stock price will jump nicely, because you have to acknowledge the production coming out there and how that's going to hit profit and revenue for the quarter. So we'll keep you posted on this. Without getting this kind of catalyst, we're actually expecting the stock to roam back into the 720s plus or minus 10 points and kind of ride that out for the whole week, with a likely dip back down, because the market makers like to make money on puts. If in fact Tesla can get into the 730s, 740s, I think the ride from 730, 740 to 700 is a lot further than 715 to 700. And so I think there'll be a heavy incentive off of the 700 call positions, number of them, to get it back below 700 again this coming week. But, you know, I guess stick around. We'll definitely make a point of updating our option situation for the week, midweek, as a way to figure out how things have changed based on what we're able to see over the weekend. One other item that has been happening a lot that I've been surprised by is, and I'm happy to take input from you if you have an idea on this, is situations where instead of there being a larger open interest, we're now starting to see certain options trade. You know, like there'll be 5,000 options and 20,000 of them will trade, meaning there's a difference of, you know, the same options being cycled through multiple people. And that feels strange to me, given that there's actually ways for people to sell more of them if demand is that heavy. But in this sector, I'd have to say it's somewhat of a learning curve for me. But the basic concept of large numbers of puts, stock tends to go up, large number of calls, stock tends to go down, has pretty much been a common theme that's worked out quite well. The one other thing that I wanted to cover from an options perspective this week is I have a friend of the show that we sort of compare notes on trading. And something happened this week that I thought was fascinating, which was that all of a sudden there were 10,000 puts at the 710 level that were purchased on sort of Friday morning, Thursday night, Friday morning, actually. And so that jump in number implied that instead of the drop being somewhere around to 705 or below, it suggested that there was a lot of puts building up. And therefore, when you have huge numbers of puts, call it 50 to 100,000 of them, that's an incentive to market makers not to force the price lower, because it'll make those puts profitable. In this case, when you only had 10,000 puts that popped up there in a 24-hour period, it gave the impression that the market makers were trying to keep the stock at or above the 710 level. But my argument to this was that what does it matter 10,000 puts popping up when you actually have, 50 to 100,000 calls that they're trying to wipe out that day? There's just too much money on the other side of that trade to worry about that number suddenly appearing. It just meant that there are certain market makers that decided to make money on puts as they can see how obvious it was that the stock price was going to fall. So I wanted to encourage you to keep in mind that Peter Lynch and others tend to focus on long-term investing, 3 to 5 years at least, minimum couple of years. And so the core logic of that makes sense. I think any kind of reading, et cetera, that you do is a good idea to expand your knowledge base. I have to say that the most difficult part of trading is what I call the beautiful things that are out there. For example, charting. Charting can be a great idea. The problem I have with it is how it tends to trail the news rather than lead it. But also, I'm worried about charting because of what I call sniffing. So the computers have gotten so powerful that what we now use on our desktops used to be supercomputers. So even individuals can get into the game of punishing obvious trading strategies. And so one of the things I don't have anything against charts, but the problem that I found with charts being so predictable is you all of a sudden have market makers who have an incentive to leverage the ability to destroy those who trade on those charts. So if you keep an eye on it over time, I think you might notice that the trend of charting being a good exercise that's understandable, but there being limited profitability there because all of a sudden those folks are getting taken advantage of by well-programmed computers, by market makers who are able to anticipate what the charts are doing and to employ strategies to cause you to lose money if you work with the chart sort of process and ideas. So I look forward to feedback on this because I don't have any problem with charts. It's just that if you do a great job on charting and you lose money, it suggests that something else needs to be done there. And the things that we do in terms of process of figuring out direction and price for the stock tend to identify what the market makers are trying to accomplish and encourage people to either ride with the market makers or against them, but know where you are positioned relative to them. And in theory, that concept could go badly as well. But the people who can afford the most expensive computers tend to be the market makers. So understanding what they're trying to do actually, I think, can be very lucrative. So in general for the week, I see us up early part of the week as usual after the pin is released, and then tailing off as the week leads out. But again, we will have a mid-week show to ride the new data that we're getting sort of post Monday, Tuesday's activities. Any rate, again, this is a copyrighted broadcast. Any reproduction without permission is prohibited. We also remind you to like and subscribe. Join us on Patreon if you'd like daily ideas to assist you in your trading. This is, also wanted to encourage you, no more than a light salad prior to lovemaking, to ensure that you have all your energy resources to enjoy more. And try out the core training. I think you'll be happy. We have a full list of other health tips below, as well as books that we recommend. This is Greg for Teslafaninsight. Thanks once again for joining us. Tschüss German, au revoir French, Lehitro, Hebrew, Khoda Hafez, Farsi, Zdravstvuyte Russian, Ni hao ma, Chinese, Konbanwa Japanese, Hey do Swedish, and in Jamaica we say enough respect, walk good man. Thanks for joining us and have a great day, and bye for now.